Good morning, traders. It's 8:02 a.m. Chicago time, 9:02 Eastern. This is another Trader Bite on Monday, the 20th of June, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Looks like we're dropping a few frames here. If you are getting a choppy feed, just on your screen, just dial the scale back, the time scale back, and keep playing, and it should fix itself. As far as news is concerned, overall, the biggest news overnight is that the risk appetite's back on in equities. Recent polls in the UK show that the referendum vote is moving more towards the Remain camp, causing a very large, about a 15 or more point gap right now from Friday's close. But that's basically where we are. The British pound versus the US dollar is higher by over 2%. 2%. This is the biggest gain since 2008 in the British versus US dollar pair. Again, the Brexit polling led to a further unwind of risk off positions as the Remain camp regains momentum. Bookmaker odds show higher probability of Remain between 72 and 77% currently. So that's really what's driving us right now. I want to remind you again that on Thursday, we have the Brexit vote. Some details on that. I'm sure you've got notices from your broker regarding the fact that the margins are going to 100% on many products. In fact, margins are likely to rise before the release. Some extreme volatility is expected on Thursday. The vote for the polling places for this referendum open at 2 a.m. Eastern and they go till 5 p.m. Eastern. 2 a.m. Eastern to 5 p.m. Eastern. That's a long period of time with which the market has to deal with continuous data regarding polling and how things will shake out. Thursday is expected to be very volatile. I intend to be there for the cash session open on the European session, which is about 2 a.m. Eastern. It's actually 3 a.m. Eastern, but 2 a.m. the bunds start to trade. So something to pay attention to. That's the biggest item of the week. Other than that, in the top news, not too much going on. Let's review what we expect for the week. Starting with today. Today we got German PPI and so on. Nothing dramatic. ECB's Merch is speaking currently. Tomorrow we're looking for the zoo survey expectations at about 5 Eastern, 5 a.m. Eastern, 4 Central. Fed Speaker Yellen at 10 Eastern, 9 Central, also tomorrow. Wednesday, we're looking for FHFA House Price Index at 8 a.m. Central, 9 Eastern. Existing home sales at 10 Eastern, 9 Central. Consumer confidence in Europe also at 10 Eastern. Gasoline, distillate, and crude oil inventories on Wednesday. Thursday, German manufacturing PMI, services PMI, Eurozone manufacturing PMI and services PMI. And then we're looking for manufacturing PMI prelim on Thursday at 9:45 Eastern, 8:45 Central. New home sales at 10 and leading index at 10 as well on Thursday. And then, of course, the big Brexit vote and all of the news disruptions from political leaders and economists and so on as the day goes on. So that's expected to be a fairly volatile day if you're thinking of taking a day off for the week from working to watch the markets. Thursday would be the day. Friday, we're looking for IFO business climate out of Germany at 3 Central, 4 Eastern. And then durable goods in the morning at 8:30 Eastern, 7:30 Central. University of Michigan final at 10 Eastern, 9 Central. We're looking for Fed's Kaplan in the evening. That's how the day is shaping, or the week is shaping up. Again, today, pretty much all the numbers are behind us, and we have ECB Speaker Merch. Currently at 12:15 today, we're looking for Fed Speaker Kashkari. And at 12:30 Eastern, we're looking for ECB Speaker Lautenschlager in Frankfurt. Let's take a look at what we have as far as Friday's trade, a review. The primary hypothesis for Friday was for a test of that week high. And then the expectation was for the market to move back down towards the 2060 area and for it to sit sideways. So ultimately for Friday, I was looking for this week high to be taken out, and I was looking for it to go into balance. Thursday being a trend up day. If you recall, Thursday we tested the major 2042 down to 2040.75 level, and that there's a lot of confluence in that area, and we popped up about 18 points. So actually it was about 30 points. A big trend up day, a boxy profile, no consensus. So the expectation is that the consensus comes on Friday from Thursday's rally day. So the primary hypothesis was for open auction in range, test the prior high, take out this week high at some point in the session, but mostly go into balance into the end of the session here. That's what those parentheses are for. That didn't quite happen that way. On the secondary hypothesis, same thing, but we were looking for a test down at first, finding the buyers down here in the 2060 area, and then we would go and test the week high, and then also go into balance into the close. Here's what actually happened. Remember on Friday's session, I was looking for some pretty decent support in this consolidation zone, in this zipper zone here, and we did get that. It tested the other side of that consolidation zone before the market took off. Here's what actually happened on Friday. Let's look at it on the trigger charts a little bit clearer. So we had the open auction on Friday. We had a swing down, back up. If you look at the delta, you'll see the delta. There's just nothing going on there. We did go sideways at the open, but it looked like Hypo 2 was in play. We tested down below. We pushed all the way down to 2053 or so, and then I was looking for it to rise up and then fall back into the middle for a neutral day. Did not happen. It just went right into balance, and we ended up doing the balancing by the end of the session, but it did not do any tests of the high. We continued to hold the week high on Friday, and the market just ended up with a normal variation day, with the profile finding consensus around the point of control, the MC point of control for this region. So overall on Friday was just a rest day. If we look at where we were trading this whole week, here's the micro composite. If I move this back to not include Friday, you'll see that the point of control was up at 2070 or so, and it shifted down. It shifted down to 2062.75 with Friday's trading, and currently we are trading in the 2085 area. And so what we've done is we've moved in the overnight session on this Brexit stuff. We've moved from this consensus price area in the 2062, and we have pushed through the next area up, which is built on the Wednesday's trading, and we are trading in the upper distribution here. We have a gap zone above us. What the market has done overnight, the overnight high is hidden in here somewhere. The overnight high is this line right here. The overnight high is hitting on the high volume node from this composite. Essentially, it's hitting the high volume node from the prior Friday, the 10th, right here, and that's where we stopped. The market's a little bit is a little bit ahead of itself here. I know that the remaining values, or the remaining polling numbers coming in is very bullish for the eurozone, and therefore the stability provides investors with the opportunity to take risk. However, when I look at the overnight session, let me see where here we go. Let's move this over here. When we look at the overnight session, it's saying that it's not done to the upside. It's not likely to be done on the upside. The overnight session is very skewed to the high side. The point of control is on the high. The high is very, very weak. A lot of volume went off at the top of the profile, and this tells me that there's likely to be an extension up, so that the profile will eventually likely look something like this, where we're looking for an extension up, and that's really where the play is. This the action overnight here in the eurozone has completely wiped away my hypotheses from last night's homework. But overall, that's good. We're leaving a lot behind, a lot below us. We are tangled up in the point of control right now. We are tangled up in the MC high volume node. So the expectation this morning is not for your typical rotation down on the open. So let's look at that. So this looks a little bit noisy because we have a ton of confluence in this area. We've been in this balance zone for a while. So we are looking to open somewhere in here. The expectation is that we do push this high. The last weekly high is 2089.25, and we're likely to push this high up before we start to look for a rotation down. I expect the market to balance out and start to move lower, but I'm looking for a higher move early. So that's how things are shaping up. The primary hypothesis is for the market to open out of range in an open auction. So OAOR, open auction out of range. And then I'm looking for it to test and push that overnight high up. Remember, the overnight profile looks something like this, and I'm looking for it to extend up and balance out a little bit. We need to find, the market will likely want to find an excess high to start, for the sellers to start coming in and testing lower, and the only way it can do that really is to test higher and advertise for those sellers and make sure that the sellers are there before it starts to rotate down. The rotation down is likely to take us to 81 at first, pull back, and then I expect it to try to push back down into the 2073.25 composite zone. Remember, this price here last week was the key over-under price. Remember, because we stayed under the 73.25 last week, the expectation was to push to 2042 for a bounce. We got our bounce, and then this price is back in play. So this becomes the key target of the day, 73.25. Again, the primary hypothesis, open auction in range. So I'm looking for noise on the open, looking to extend the overnight high upwards, and then I'm looking for sellers to step in once we get into higher highs, and then the expectation is for it to start moving towards the 73.25. That's the primary hypothesis. The secondary hypothesis is to look for an open auction out of range and attempt lower, a gap zone that remains open. before it finds its buyers, and then it starts to find its buyers, and then we drift up. The target for that is 95.50, and we're back in the game. The buyers are back in the game looking for 2100 and then the all-time high above there. So that's hypothesis number 2, open auction out of range, looking for sellers to step in early to find the buyers. Buyers coming in to take it back up. We stay above the 73.25. We leave a gap zone behind after 2 hours of trading this morning. If we see this gap zone stay open after 2 hours this morning, then I'm going to be looking for bottoms for basing action and for it to break to the upside. That's hypothesis number 2. Okay, so those are the ideas for this morning. A lot can happen here. There's a lot that can play in this large gap, but most of all, you do have a news-based movement here. So there's a lot of there's a higher probability of testing the scene of the crime with those news events. So I would not commit too much to a trade. In other words, try to get your risk off the table early if you can, if you're trading more than one contract, or if you're in equities, if you can take some of your position off in your stocks. That's the way I would trade it. I would be very tentative. The news could kick in at any moment, and there's nothing you can do about that. So secure your risk first. The last thing I wanted to remind you of, I do invite you to watch that Convergence Tuesday, a Convergence event from last Wednesday. The video is still out there. It's getting quite a few hits, but I think it's an interesting thing to listen to from a couple of automated traders telling us how their fully automated system runs. It just helps us understand how that works in the markets. Good luck today, and I'll catch you tomorrow. And then we're going to have a public AMA on Thursday. Public AMA on Thursday at 12 Central, 1 Eastern. Good luck. Take care.